Joining me now to discuss the week ahead for markets is the director at Louis Capital Markets, John Plassard. John, thank you very much for coming into the studio.
Thank you,
now,
Rowena.
first of all, let's take a look at some of the potential market movers and news releases coming out next week. Now, we've got several important inflation reports from China, Germany, the US, a rate decision by the Bank of Japan, several trade balance figures, but most importantly, a fair amount of important data coming out of the two economic superpowers, China and the US. Now, if we look at this, what should we be keeping a close eye on next week, John?
I think we should keep, first of all, a close eye on the Chinese inflation. That was, in fact, the battle of 2011. They were fighting to get and to keep the inflation lower than 4%. They kind of won that battle. So we have to see in the first months of the year if that's still sustainable. The second thing is the US, and we'll see globally the US also because the earnings season is starting next week and the picture don't look that nice. We have to look at three factors, in fact, for those earnings season. Is the US dollar impacting some companies' earnings, also the price of the oil, quite high, and also the capex spending that was also quite high at the beginning of the year. So the two main companies who will start on Tuesday is Alcoa. That's a good barometer for the economy. They are producer of aluminium, for example, and also Chevron, who is also a good barometer because they are going to give us the taste of companies related to oil price.
Now, John, let's go on to discuss the macroeconomic picture for the global economy. What's it looking like, in your opinion, at the moment?
In fact, I call it the triptych macroeconomic, and it's like a painting with three panels. And the first panels would be China. As we said before, 2011 was the battle against inflation, and this year it's a battle for growth. I remind you that the objective of the Chinese government was to keep growth over 7.5%. And many companies in Europe and in the United States, of course, release on this growth. So if it should go at 7%, for example, I don't believe for this year, but if it should go at 7%, it could be really dramatic. The second panel would be Europe, and of course with the sovereign debt. This last days we have Spain coming out again, and if we take a picture of Spain, don't forget that Spain, it's over 24% of unemployment, and if to take the ages between 15 and 25%, it's about 38%. So it's dramatic, and in fact the country is in recession, and also lasting. The real estate bubble burst not so long ago, so it's going to be dramatic for Spain. So they need to ask for help, and of course money, as Portugal, Ireland and Greece, of course, did before. So the third panel would be the United States. They are trying to maintain a growth. They have a small growth, but there is growth. And as Bernanke said 2 days ago, one of the main fear is unemployment. Those last 2 months, we saw a relief a little bit in that, but we should have bad news coming on in next weeks or in the 2 next months. So those are the 3 panels for that macroeconomic triptych. In fact, it's quite a mixed picture of that macroeconomic triptych.
John, I'm going to pick Spain out of what you just said there. Now, there's fueled fears that Spain is going to be following Greece, Ireland, Portugal in seeking a bailout. Do you think this is the case?
To be really frankly with you, yes, and they should have done that more than 1 year ago, so it might be a little bit too late. Even if the ECB has eased their condition and their objective about their debt related to GDP. But yes, of course, they have to ask for help today, and I hope it's not too late.
Now, the ECB will also be publishing its monthly report next week. Now, one of the questions creeping up at the moment is whether the ECB, whether their easing cycle has peaked or not. What's your opinion on this?
My view is the two first LTROs were supposed to ease credit condition for small and medium enterprise. And that was not the case at all, because the money was lent to banks was directly put into the ECB. So I think we have now credit conditions who are worsened. And I will say that my fear is that before the end of the year, we should have kind of a credit crunch in Europe. And if they launch a third LTRO, we should also have a little bit inflation in the market. So I think it's not the way to resolve the solution, not at all.
John, thank you very much for coming in to discuss the week ahead.
Thank you, Rowena.
So there we have it, quite a busy week next week in terms of potential market movers. Now have a great weekend. Goodbye for now.